Hello and welcome to the big story here on the BDTV Breakfast Show. This is where we get to provide key insight into topics crucial to shaping our nation and our economy. My name is Elizabeth Musa. Today we're exploring global trade and the effect of President Donald Trump's tariffs imposition. Trump's administration in the United States has triggered what many across the world now refer to as the tariff wars, and that this is following the imposition of different percentages of tariffs on goods exported to the United States. This is seen creating some form of disequilibrium in the global trade, as many of the countries affected are slamming retaliatory tariffs on United States goods coming to their countries. While African countries are not left out, goods from Nigeria to the United States in particular are slammed with a 14% tariff. Today we're asking questions on how this development impacts Africa. How is the continent positioning itself to either benefit or defend itself against the tariff war, and what is the way forward? To address these issues and so much more, we're being joined virtually by Professor Ken Ife. Professor Ken Ife is a distinguished economist and a global trade analyst. He's also the lead consultant on private sector development to the ECOWAS Commission. You're welcome to the show, Professor Ken Ife.
Thank you for having me.
Good to have you. Now, let me start by asking you this, Prof. Does this tariff war give you any sort of concern? I imagine it does. And should Africa and Nigeria be worried about it?
It's a matter of great concern. And I think both parties have to be extremely worried about the consequences. But let me begin by saying that when Trump was being sworn in, and the following week, when he was addressing the Davos, the World Economic Forum, I was simultaneously on Arise analyzing the thing. And there were two things that I said. I said there are three major crises facing the world. One is the third war in the order of immediacy. One was the Third World War, because it was just about to break out. Russia was just holding on for Trump to come in. The second one is a global trade war, which, as you've seen, has crystallized. The third one is a currency war. So what happened was that Trump did his homework for these 4 years and decided that he's going to avoid a third world war because America will be hit devastatingly. And he knows that. He knows that not only that the war will be fought on American mainland, but there's a big risk that all the American carriers in the high sea can be taken out overnight. So he decided to get Russia on their side and then tackle China. And China is the epitome of the global trade war. So that is why he's doing what he's doing. But let me tell you one thing. In 1930, American farmers were out on the street protesting about the influx of food from Europe. So American government hastily placed a 6% tariff on those goods. And what happened afterwards was a reaction. The Europe now retaliated, and it ended not in recession, but in the greatest global depression ever seen. Now, we're not talking about 6%. We're talking about 125, 145%. We're talking about something different, and it's not just about against Europe, it's against the entire world. So the consequences are things that we are going to discuss if we have time. But I can tell you straight away that there will be major consequences for Nigeria and Africa on the fiscal side, much more devastating on the monetary side, than the trade policy side, the industrial policy side, investment side, employment side, and the growth forecast. Every macroeconomic parameter will be hit. You understand? And I want to tell you also that it's going to be hit even before the 14% comes in. We're already taking it because we are an import-dependent economy. It's already hitting us because we're an import-dependent economy. Now, let me fill up a little more gap. In the same period, America's foreign policy trade policy was under constant flux because different legislators were fighting the corners of whatever manufacturing sector dominates their states and region. So they decided to give power to the president. So they gave him wide powers over trade policy. That's why he's doing it without recourse to Senate or Congress. Now, secondly, the man is dreaming about last century America, where tariff was accounting for 80% of the revenue. Now it's only 4%. And in 1945, America set up a global trading system and then set up Bretton Woods institutions, of which World Bank, IMF, WTO. In fact, WTO came in as a successor to the General Agreement on Trade and Tariff, which was rolled over in 1995 to GWTO. China entered around 2000, 2001, and the moment they entered, America started complaining. All right, so that is the genesis of it. But I have to tell you this, no country has benefited more from this global trading system than America. America is 4% of world population, but America is punching above their weight. They account for 13.5% of global trade. They account for their currency dollar, which is going to be the third war. The third global war that will be on currency. Their currency, 84% of transactions, global transactions, financial transactions are done in dollar. 60% of global debt are denominated in dollar. 59% of global reserves, foreign reserves, are kept in dollar. And America's GDP is about 25% of world GDP. But when you look down on that, their 13.5% control of regional trade, very small is to do with goods. Over 80% are services, and they think that you can raise tariff on goods for a company or country, and they will not hit you back on services. Even if you look at the GDP of America, you see that the industry is 18%, manufacturing is only 10%, and then the rest of it are services. Most of it, over 80%. And also, when Mitt Romney and Obama in 2012 were campaigning in Texas, they all were blaming China for the lack of jobs in the manufacturing job meltdown. They were blaming China, and they were blaming China. Because in America, there was automation in the car factory. So the second, the Americans were not investing in automation. They went to China elsewhere to invest. And then there was a demographic shift. All of these factors that caused this problem in 2000 are not being addressed. So this man just thinks he will bring back tariff and everybody will come down to America. If you take a car has no less than 200 parts. All these parts are sourced from all over the world. So if you're telling a company to come and rejig and do it in America, it will take 5, 10, 15 years before they can relocate. And if all the parts of a car are made in America, nobody can afford to buy that car except American billionaires and American millionaires because they will be so expensive. One more, America is the richest country in the world. Their income per capita, GDP per capita is $89,000. The third and fourth and fifth, which are Japan and all these other Europe, they're all about 40,000, 45,000, nowhere near American consumption. So America consumes. They consume and they borrow. China produces and saves money. China has over 6 trillion in their reserve. So what happens is that America has about $34 trillion debt. About 8.5 trillion of that is from other countries. So when a country is making money, they go and borrow from you. And then what happens is that all this borrowing and borrowing, they will never repay their debt. They will only print more dollars. So when they decided to transit from gold standard in 1960-something to dollar, nobody fought them because they were far too powerful. They just did it. But now the world has learned to go the other way. And then what they're saying is this. In fact, when he was making the announcement, I said, look, I thought he was going to say that America is leaving WTO. Just walk away. Why are you just suspending funding, going there, and then you want to have one leg here and one leg there, and come out so that the remaining 84.5% can go ahead and do their own business and continue to maintain under the WTO, the globalization agenda. So that is disruptive, but it's going to fall flat on its face. That is the point. That is the point.
Right, Prof. We have seen that China and other advanced economies standing up to President Trump by imposing retaliatory tariffs on the United States imports into their countries. Now, do you think that this is the way for them to go? And do you think that Africa is positioned to do this same thing?
Forget Africa hasn't even got a chance for any of this, neither Nigeria. These countries can flex their muscle, yes, but I think they're even doing the more important one, which is to attack him on the third agenda, because the third agenda is currency war. So Canadian Prime Minister went to Europe and told them, look, I'm being owed $350 billion. That's what I invested in US Treasury bill. Yeah, look, EU, you are 1.5 trillion. Japan, 1.7 trillion. already China has dropped down their 1 trillion. So he was telling them, let us all do it at once, so that this man will know that we are serious. And that's exactly what they did. Within 2 days, they started cashing their treasury bills. Now, what that means instantly, once you take out your bill, that what happens immediately is about supply and demand. The price rises, the yield goes up immediately. And because any other thing you want to buy, you're going to buy it at a higher rate and all of that stuff. So that is what is going on. So they are seeing massive attack on their reserves, on their holdings. And that's a big signal because the stock market is collapsing on top of that, and then bad signals, and then other. That is to even talk about. And I take you to Ronald Reagan. In 25th of April, 1987, Donald Reagan warned America, please don't forget the lessons of the past, the depression. That whenever you build a high tariff war, what you are actually doing is that you are insulating your businesses, and then you are drawing them to be more dependent on government. And in that way, you start subsidizing them. They will stop innovating. They will stop inventions and all that stuff. They will become less competitive, and their prices go up and up and up to a point where even the domestic consumers will reject their product and start looking for substitute products and end up losing all those jobs you think you are protecting. And secondly, when the countries impose tariff on retaliate, America is going to lose 5 million jobs that are export related, and they're also going to lose 5 million jobs that are import related. So you already have 10 million going to have to fight you. So this is exactly where he is walking into. He's walking into a trap. Before the countries start even talking about reversing the traffic, no, they are coming in with like a ton of bricks, and they are making sure that the third war is also fought concurrently. So what this man is trying to do is to, push this confusion, and they start negotiating with countries. And part of the implicit negotiation term is you got to keep dollar on the thing. And they know this. These people know that game is up. I have to tell you this. All this has happened in 2018. China became so powerful economically that they were keeping them away from foreign reserve, from IMF basket of currencies. So in 2018, they now admitted China into the yuan, into the basket of currency. And as soon as they got admitted as a reserve currency, countries started taking reserves in yuan. Nigeria took 4.5% of our reserve in yuan. And then it was now followed by currency swap. So you can see how they have liberated other countries. So they are now doing that. And now you have BRICS that are now saying, we're going to move away. We're going to move to gold standard, not just gold, every other sensitive, high quality metal will come into the mix. So countries are scrambling, they're going away. And you can see that half the world population is gone away with BRICS. And then 80%, 84% of world trade is going to walk away. It's not going to be easy. And when you push people to walk away and enter into new agreements, when you change your mind, they are not coming back. It doesn't happen because they don't trust you anymore. He doesn't know this at all. He thinks it's this reality show business. That is what he thinks is happening on global trade. He's far from it.
Right. And Professor Ken, if many people are expressing some sort of fear about the possibility of a global recession, from everything that you've said so far, do you share the same sentiment that this could lead us to a possible global recession?
Without a doubt. Now, let me get down to statistics. Already, WTO has predicted that the trade war between America and China will cause 90% reduction in the trade between the two. America's export into China is $150 billion, about $140-something billion. Chinese export into America is $450 billion. Between the two of them is $600 billion. Now, what you are seeing is about $500 billion worth of goods that have been produced, already paid for, that are in the production line, are going to be looking for another market for them. 500 billion, just from China alone. You know what that means? Two things are going to happen, are already happening. China is bringing down their currency. They are devaluing their currency. You know, that means that all these goods coming from China will become extremely cheaper. It could be cheaper by 10% or by 20%. Secondly, China is going to be subsidizing their companies that are exporting those goods to be able to dump them. That means also predatory pricing. No, I'm not talking about just dumping of substandard goods, predatory pricing, penetration pricing. So what happens is that Nigerian traders, the notorious Nigerian traders, are going to be scrambling from every dollar they can find anywhere to import those things that are coming in extremely cheap. And there's no price regulation in Nigeria or in many African countries. So they're all going to have a pass-through, inflation pass-through, and the prices will go because they want to make money. Now, let me tell you what happens after that. With that dollar being demanded, central bank, once you demand and supply, then the exchange rate goes up. You notice it is now from 1,545, now it's about 1,605. It's going to be going up, incrementally going up. And when it goes up, what happens? Central bank will go to the reserves, foreign reserve, to be able to fight to defend Naira. Now that means pressure on foreign reserves. Take another one. Now I have oil price coming down. Our benchmark was $75. I have attacked ministers, everybody. Reduce this thing to 70 to 65. They refused. They went with it. Now the cruise price is 360. It goes up 61, 62. It comes down to is down. And then the production volume in the budget was $2 million barrel per day. And then we are doing 1.4, 1.5, 1.56. Now the issue is this. I have calculated the fiscal impact, and it came to 36% reduction in government revenue coming from oil. Then I calculated worst case scenario, it came to 56%. Now, let me tell you what that means. First of all, our crude is being drilled at $30 per barrel. Already we have securitized a substantial amount of our crude for the next 5 years with Afrexim Bank. So what more is going to be left? Whatever is left is not going to be enough for Dangote's refinery or to these refineries. So there is a storm that is coming, shortage of dollars coming into the economy. Government will be looking for dollars frantically to service our debt. Our debt deficit, according to is $5.2 billion, what we will require to service our debts this year. $5.2 billion. That's what we need. So now, let me put this on top of a crisis that we're already sitting on. We're already sitting on the fact that all these debts you are looking at are long-term borrowing on concessionary rates of about 2%, 3%, other small rates. But what are we using to service them? We are using high-interest, short-term dollar-denominated bonds. In other words, this euro bond, which you are getting at 10%. How can you be taking short-term 1 year 10% to service long-term concessionary rates? That is a mismatch. And that is what sent Silicon Bank, America, into bankruptcy. So you have that problem. Then you have problem of shortage of the dollar to finance it. You have the pressure that you're going to central bank again to ask for dollar from their reserve, and you're going to be issuing more instruments in dollars. So it is not going to be easy. I want to tell you that it's not going to be easy. I know there is trade tariff of 14%. What are you going there? What are you going to do? What are we doing with America is oil. We don't even have enough to give Dangote. So that's the issue. You have small trade of maybe about 4 billion naira or some trillion naira, which is food and non-oil something. But already man is saying that they will lose 2 trillion out of that 4.5 trillion that they were exporting. But that is based on the number that is if 14% materializes. Now, let me tell you, why America can hit you directly. We're not really supposed to hit America directly because we are part of ECOWAS common external tariff. In ECOWAS common external tariff, we have band 0, which is mainly for agricultural produce. We have band 1, which is 5%, which is usually about machineries, agricultural machinery. Then you have band 2, the third one, which is 10%. Then you have 20%, band 4, and then you have band 5, 35%, which is to placate Nigeria. So you have all those, but you can't break ranks from a tariff agreement with the rest of us because it's tariff for the outside world. So you cannot target America outside the framework of that tariff. What you can do is to invoke the levy instrument and say, okay, if I want to target American sugar, rice, and the wheat, then I'm going to put 10% or 15% or 10% levy. So that levy is not about tariff. It has to be levy. Do you understand? So levy instrument is what ECOWAS allows you to use to augment. If based on the principle of ad valorem. So it is the instrument you can use. You use it selectively. But it is not, in fact, if you try it, they will punish you more because they're going to take away all the aids. They're going to squeeze, do what South Africa is in trouble with them. So and then they will come for your president, they will come for your minister, they will come for all the people's top officials. They will start releasing information about them here and there, seizing their property, banning their business. So it's better to lie low and do what you need to do, which is to look inwards and then rally around your production capacity, local production capacities, and then export to Africa and ECOWAS under the trade Africa Continental Free Trade. So that you can build your own capacity, raise your internal the intra-region from 14 to 20, 30, 40, 50. Europe is in 70%. That's the way to salvation, not to fight trade. You don't have control. You haven't even revised your trade policy. The one we did, the last one was 2005. The one we did in 2012, I wrote the trade facilitation chapter, was never passed to the effect. So what policy are you talking about? We have to go and have a trade policy, lodge it with WTO, defend it, and then come and say you want to implement it. Otherwise, you are working under the framework of ECOWAS. So, it's not easy. So we shouldn't be rearing our head and they're saying we'll do this, you do that. You just stay out and watch and focus on your domestic challenges. Because the thing is too much, what we are facing. I mean, I can give you one example of how you can respond. You don't have infrastructure. You don't have power. What can you manufacture without power? The name of the game is add value to areas of natural comparative advantage and also areas of competitive advantage, because competitive may not be natural resources. The natural resources God has endowed you with is agroecology, only second to DR Congo. And then you can grow all kinds of crops. You eat mango, throw it in a way, it will germinate. It doesn't happen in many other countries. Then you now have so you can process, agro-process. You have solid minerals, 44 in mineable quantity, including gold in 6 locations. Come on, produce this and then put them to the central bank for their reserve. In fact, that 33 trillion ways and means, if you had used it to buy the gold in Zamfara and all of that, and keep it in the vaults of central bank, we wouldn't be where we are today. So you got to focus on that. And that's what BRICS are doing. That buying, see all the collapse in the capital market, all meant gain to gold. So this is how they're going. They're going on metals. So we're going to go that way and then stop doing all these things, reduce your exposure to the dollar. When you do intraregional trade using the Afrexim Pan-African Payment and Settlement System, you are removing the impact on dollar. When you do more swap with China, you are reducing your hemorrhage on dollar. So in that way, you create your own pathway to survival. Companies like Dangote in the petrochemical industry that have invested $20 billion. What you should be doing is go and talk to them. Talk to them and create an ecosystem, petrochemical ecosystem of about $100 billion. They've already put $20 billion on the ground. Go and bring 4,000, 5,000 Nigerian companies in that area of petrochemical, and then they will work, they provide their own power. And they will have a reliable lead company, and you build them against them. I tell you why that is possible. If you look at Texas has 32 refineries. Texas have 5,000 petrochemical related industries in Texas. Texas refine 3.2 million barrels a day. Texas have the gas reserve, the energy, the barrels of reserve they have is about 20 billion. Nigeria is 37.5 billion. So you are not breaking any Guinness Book of Record. You are using your strength. In the same way, those who are in cement come around there building material, then those who are in other processing companies go and cluster around them because they already have overcome the energy challenge. They are in their own ecosystem. Get MSMEs. What Nigeria has is 42 million MSMEs out of 90 million in Africa. We are 48% of Africa entrepreneurship, whereas our population is only 18%. Our economy is only 15%. So can you not see? Entrepreneurship is a latent competitive advantage for Nigeria. If you say you want to do government program, Instead of sharing money here and there, thinking, no, tell these 42 million people, what do you want from me to employ one person each, so that in a month's time, they will employ 42 million people. Give them money for training the people. Give them money for holding them in employment or apprenticeship. They will create it easier. It's easier for somebody that has a business to take one more person than for you to be going around and telling people to clean gutter and you pay them salary. I mean, this is just some of the thinking.
All right, thank you very much, Prof. You've done justice to these questions. You've even painted a picture of some of the opportunities that we can take advantage of as a Nigeria and for Africa. I mean, you've spoken a whole lot, but just before I let you go, we've seen that conversations around Ponzi schemes. I'm sure you've read about the latest one, CBEX, that seemed to have crashed and put so many people in agony. How best do you think that Nigeria can tackle this issue of Ponzi schemes? Over the years, we've continued, from MMM to now CBEX, we continue to see these things happening over and over again. What do you think that the authorities can do to tackle these issues of these schemes?
Ponzi scheme is like insecurity in Nigeria. And then you're asking me, how are you going to solve insecurity in Nigeria? If you can double the number of policemen from 200 and something thousand to 1 million, quadruple it, you can get more soldiers, double them, they will not stop the insecurity. It is when it becomes a collective business that the communities rise against it, that the communities do something about it. Because those insecurity people belong to communities and they enter communities, so they know them, they see them when they come in and they do something. And areas where they have succeeded or failed to succeed, like there are some patches in the north where they couldn't succeed. It is because the communities came together and decided, no, we can't bring Quran or drink Quran. They all swear all kinds of things. And there's some arm themselves, whatever. There are so many measures. In Ponzi scheme, if the people that want to do these things must come under regulation, and they are not registered with SEC, they are not registered with central bank. Come on, so what are you doing with them? What are you doing with an exercise that is illegal because it's not under any regulation? SEC is not regulating them, central bank is not regulating them, because central bank does monthly risk-based supervision, and then they do those with NDIC that guarantees 50% of the money deposited will be returned to you. All those kind of things, you don't have that. They use prudential guidelines, and then in the SEC, they also have their own instruments, monitoring instruments. If you're not that, so what are you going to do? The people that are involved in this are also hiding it both from their friends and then also from the authorities. So how do you expect them to know to do something? That is the problem. It's the users. It is about our greed, the propensity to get rich quick. And then somebody comes and tells you, will give you 50% interest, and then he'll give you up front. There are some you can do. Go and buy treasury bills because they will give it up and it has sovereign guarantee. But they print more naira. So that's like America doing us now on their trade. They are owing everybody in the world, and then they will go and print more dollars. So that is my simple take on this. It's a very complicated issue, but I don't want to go into all that round bend, going around and around the bend. That's why I've told you what needs to be done.
Thank you very much, Professor Ken Ike, for your time this morning on our big story. Truly insightful speaking with you, and we'd love to have you once again. Thank you very much.
Thank you. It's my pleasure.
And that does it this morning on the big story. My name is Elizabeth Musa. Keep watching BDTV.